All right, if you're watching this, you're watching part 2 of the Bear Chart Study Guide. Welcome back. I hope this is helpful, folks. Please let me know if it is. I want to look at some bullish ones. And you can see it here on the chart. The only time on this chart, now I would, if I were you, I would set up an RSI set to 14. And I would, every single time I look at a chart, what I was doing just now as I was looking through charts was I sorted on TradingView for overbought, sorted for biggest gainers, losers. Then I flipped through the charts, and all I did was I looked in the lower panel. That's where I looked. And I looked for overbought, oversold. I looked for it to be about overbought or oversold. That's all I looked for. I didn't even look for the MFI line. I don't care about the MFI line. Do you know how many emails we get every day about the MFI indicator? If you guessed 30 to 50, you'd be right. We have a canned response that says just look for overbought or oversold on the RSI. Anyway, there you have it. Let's take a look at this chart. So I love that it's oversold. I don't like that the candle body is so big. I don't like that relative to the size of the wicks. So there's no early entry on day one. Day two is a bullish candle that ends the day above the candle of day one. I'm telling you right now, that is a pretty crazy good chart. Now it opens on day three lower. And I might stop out of that. I might, I don't know. That's a tough call. I would probably, I don't know what I would do. I don't know a lot about buying these, right? I don't do a lot of buy trades, so I don't know how I would handle a buy trade. I don't even know how I'd handle a sell trade in that case. Here's American Express. That is a giant candle body. Forget it. Forget it. There's no trade here. The day two candle is even dumber. The day two candle is gross. This is not an engulfing candle. It doesn't finish the day below. It's just not a trade. NLY, probably no options on this. If there's no options on this, you don't even think about it anyway. You don't even bother with it. But let's say that I could find shares to borrow or some stupid thing. That day one candle is beautiful. It's a gap. It's got giant candle wicks. It's bullish. It's everything. And the day two, oh my gosh, it's beautiful. Where did NLY end up? It fell. That doesn't surprise me at all. That doesn't surprise me at all, right? That's a trade. That's a trade there. That day two candle is wonderful. That day two candle is below. It's bearish. It dropped. Day three is fine. It's fine. And it's day four that we just saw where it gets a really big bearish candle. It's awesome. It's a great trade. It's not, we probably couldn't take it because there's probably no options. Goldman Sachs. Not a trade. The day one candle is stupid. That's a stupid day one candle. Back over here. Let's see what Goldman Sachs looks like. It eventually dropped. I mean, it's not a surprise that it eventually dropped. It's just not a trade. It's not a trade. I hate to say it, not a trade. Here's GLW, Corning Glassware. Bullish candle, day one. Small candle body, giant wick, great. Day two is the best. It's just the best. Here's what I love about day two. Look, it's a fully bearish engulfing candle. That means the body of day two, the middle section, the body of day two fully integrates day one. The day one could fit inside of day two, 1, 2, 3, 4, a bazillion times. It's an absolutely spectacular trade. JP Morgan. Day one, large candle wicks. It's not bad. It's not bad. It's not a small enough candle body relative to the wicks to take an early entry. Day 2 right there. It's a terrible candle. Invalidates everything, even though it would be profitable. It invalidates everything. This day 1 candle blows. It's a giant bodied candle. Day 2 is even worse. You would call that an inside, right? An inside, because day 2 fits inside day 1. Forget it. Just stop talking about it. Just move on. Don't even look at it. Don't even talk to your friends about it. Don't say, oh, well, the news about JP Morgan. Nobody cares about the news. Guess what? News doesn't really matter as much as you think it does. Because Moderna could be falling today because somebody knows something that you don't know. News isn't the reason that things rise and fall. The supply and demand is the reason that things rise and fall. Someone might go here, oh my gosh, that's a trend. Don't trade Union Pacific. Okay, dummy. Did you read the news about Union Pacific? Okay, all right, let's listen. Or someone goes, why did Union Pacific print a bullish candle today? What happened? Okay, more people wanted to buy it than wanted to sell it. Nobody cares why, really. It's not really the most important factor. It is when it comes to penny stocks. It isn't when it comes to Union Pacific. I'm not going to say why. That's not even, it's off topic. Okay, day 1, bearish, awesome. Wick is big, awesome. Day 2, bullish and engulfing. The entire day 2 body could incorporate, the day 1 body could fit inside of the day 2 body right in there, side by side. It's beautiful. That's a buy trade. That is a spectacular buy trade. It's not a lot of them on here because I don't care as much about them, but I figured I'd share with them. This is not a trade that's a stupid looking candle. This is a trade. That is what we would call one of the greatest trades ever. Now, it didn't fall very much, but this day 1 candle, small wick, it gaps, small body, large wicks, it gaps. Day 2 is a bearish engulfing candle. The entire day 1 candle could shift to the right and fit inside of the day 2 candle. I would buy puts on day 2 if I could get them, the $19 or $20 puts that expire 30 to 60 days from now. If you're asking questions about how to find options, you need to watch the bear market class again. Also, you need to refer to this slide. Look at this slide. It's one of the first slides. Hey, I don't mind answering it for you. But my answer is going to be, I might not even know the best place. Go to bar chart, watch the class, and ask it in Google. You'll find lots of free resources for that, okay? Philip Morris. This is such a great candle. Now it looks bullish. It's supposed to be bearish for buy trades, but the candle body is so small, who cares? So that day 1 candle looks great. The day 2 candle is just fantastic. You could slide the day 1 candle over to the right without moving anything, and it could fit easily inside of the day 2 candle. That means the day 2 candle is what we refer to as engulfing. So great, I can't even stand it. That is what I would do at the end of day 2 is buy the $70 calls that expire 30 to 60 days from now. It's so great. There's so much about that I love. You notice we're not talking about targets or stop losses, right? We're talking about time-based stop losses. I'm not talking about profit targets. The money that you make takes care of itself. It's the stop losses that people have a hard time with. So let's talk about stop losses. Here's Lyft. Let's say that we broke the rules and we took this trade. Let's say that we said, oh, day 1, it's bullish. It's got a giant candle body. I misunderstood the rules. Oops. And let's say you bought puts on day 1. Let's just say you fudged up the rules. On day 2, you realize that it fell a bit and you've got a small profit. If you realize you broke the rules, close it. Just close it. You bought a put instead of a call, or a call instead of a put. Or you wake up the next day and you realize it wasn't really a trade and you have some money in your account. Close it, 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 close it. Get out of that trade. Otherwise, I'm going to wait about 24 hours or the next morning. And somewhere between 24 hours and the next morning, if it's a loss, it's over. So tomorrow morning, I'll wake up, and if my trades that I took today are at a loss, I will start to close those down. It's a time-based stop, not a money-based stop. I'm going to lose at most between $500 and $1,000 on a losing trade, typically. Every once in a while, I'm going to take a bigger loss than that. I'm going to end up with a bigger loss on UVXY, it looks. It looks like I'm going to, we've already talked about that. It doesn't even apply here. But on these trades, 24 hours. This is not a conversation about stop losses, but I'm going to give you some examples as they appear. Both of these day one candles don't look good. Neither of them look good. All of them would have led to successful trades, but it doesn't look good. Those day one candle bodies are too big. Here's General Motors. I took this trade. Here's a good example of a day one candle. Let's say I broke the rules and I took an early entry on day one and I bought puts on this candle right here. Let's say I woke up the next day and price jumped up and my puts were losing money. Close it. Just dump it. Day three, if I still have this trade, that would be about 24 hours after. Day three would really be about 24 hours later. Close it. So let's say I take a trade at 2:50 p.m. I'm going to hold that to 2:50 p.m. the next day, or or 8:45 a.m. the next day after that. Now, if, remember, I intuitively know to trade small amounts of money, so I'm not going to lose a lot of money. But what I'm really trying to do here is identify the existence or non-existence of a trade, okay? Here's overbought. There's no MFI, but there is like a candle here that's overbought with a really big wick below. That's fine. So that's day one, and that's day two. It's bearish. That's a trade. That's a trade right there. Where do I take profit? Now let's talk about taking profit. In the bear markets class, you'll see that I wait for pivot points. I'm waiting for price to drop down to and hit pivot points. What I'm really looking for is 24 to 48 hours of profit. 1 to 2 days. I'm in the trade 1 to 2 days, and then I close it with the profit. I can keep it open longer. I can, but what I'm really trying to do, and you've seen me do this, I'm trying to make about $1,000 a day, and I'm doing a pretty reasonably good job of it. Every once in a while, I take a bigger trade and I make more money, and that's fine. But I'm really just trying to make $1,000. I'm going to win more often than I'm losing. And I'm also trying to get my losses down even smaller. Crap, I forgot to close Lyft. Not bad. It'll be okay. Here's the Walt Disney Company. This is a fantastic day one candle with giant candle wicks relative to the size of the body. I could take an early entry there. It's fine. It opens lower the next day and I'd have some profit. This day two candle opened lower. I would have profit on that. And even if I held it all day long, at the end of day two, it would still be slightly profitable, but a bullish candle, and I would close the whole trade. On day candle, I cannot enter a new position. It's not a bearish candle on day two. It doesn't qualify. Talk a lot about early entries here, but that's just so you can understand my early entry scheming. Macy's day 1, no real gap, small candle body. Day 2 candle is bullish. There's just no trade there. This is a giant bullish candle on day 1. It doesn't count. There's no trade there. There's no trade there. It doesn't exist. Run. Look at that. Day 1 candle. It's a bull candle. It's a small body. It's a gap. Love it. Oh, I just love that. And then day 2, right there, it's bearish and it's below the day 1 candle. I would totally take that trade. Let's talk about stop losses. Let's talk about stops. This is a great example of stops. So I initiate the trade at the end of day 2. That's really the bear market class entry is at the end of day 2. And then day 3 opens higher. It's not that bad. It's not that bad. It does drop during day 3. I'm going to be in profit at some point in time, slightly, if at all. Then there's a day 4 candle. It's like sideways. I would love to tell you how smart I am and that I would stay in this trade. There's no way. I'm in the trade 24 hours at this point, and I'm in the trade 48 hours at this point. I would close it, even though it eventually falls. There's no way I would stay in that trade. It would stop out. Period. It just would stop out. Don't try to find a way to stay in it. Don't try to find me a way to stay in it. I don't want it. I don't want to know about it. Simon Property Group. This is a great day 1 candle. That justifies an early entry. The day 2 candle is glorious. It's bearish. It's fully below the day 1 candle. The body of the day 2 candle is fully below the day 1 candle. So awesome. So awesome. This over here is not as good. It's too big of a candle body on day 1. And day 2 is a bullish candle. You can't justify that trade. You can't do it. There's a ton on this one. This is a giant trick candle. It's not enough of a gap. And really, it's not a really big wick either. It just looks like a cross. Nope, not doing it. This day 1 is too big of a candle body, and it's not really, it doesn't matter anyway. There's no early entry there. And then day 2 isn't bearish anyway, so it doesn't even, there's no way that enters. This day 1 candle is bearish. Forget it. This day 1 candle is too big of a candle body. This day 1 candle didn't gap. However, it's got really, really giant wicks. Maybe you take one of 9 contracts and you take an early entry. Then on day 2, it opens higher. That's garbage. And day 2 is also still overbought. So let's call it a day 1 candle. It's too bullish and too big of a candle body. The whole thing is just ripped apart. The whole thing just blows. But I'm going to tell you something. There's something in this. There's something here. There's something going on here. This really big, bearish body above. B, 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 A. There's something about that. I bet JMI fell from here. Let's check and see if it did. Yeah. There's something about that that I really like. But you're going to have to call it a different system. It's got to be it's a different system. It's not the same system. All right. Bullish candle, too big of a candle body. So day 1, that blows. This new day 1 right here is nicely, it's nice. It's a gap. Yes. It's small body. Yes. A small body, big wick is not the same thing, really. You can have small body and small wick too. So there we go. Big wicks on the candle. And then the day 2 is bearish and it's below. That's an entry. ConocoPhillips. Way to go, ConocoPhillips. Wow, I want to try to get all the way through these, but I don't know if I'm going to be able to do it. I'm going to run out of steam here pretty soon. There's no look. There's no overbought or oversold on this chart. There's no trade here. There's no trade. Maybe some other trading system, but not mine. Okay, there's no way there's options available on this, but you could buy it theoretically. Okay, this is a day 1 bearish candle looking for buy trades. It's too big of a candle body. This is a day 1 candle. It's got a better wick, but the day 2 candle there is bearish, not bullish. Then we get this one that's it's too big of a candle body. This whole thing is stupid. The whole thing, it goes up eventually, but no, it doesn't. There's no trade here. You could maybe call that a day 1 candle, but it's bullish instead of bearish. The whole thing just blows up, and just skip it. Because what happens is you start finding trades that look like that don't work, and then you get yourself in trouble. This day 1 candle body's too big. This day 1 candle, it's a bearish candle. This day 1 candle, the body's too big. This day 1 candle, the body's too big. This day 1 candle is just fine. So we'll focus on that. That day 1 candle is pretty great. The day 2 candle here is stupid. It's a bullish candle. It's not bearish. Forget it. It's over. Just forget your analysis. I know what you want to do. Some of you are like, look at that. Look at that. Okay, don't look at that. There's a million examples of why that doesn't work. Don't get distracted. The system is the system for a reason. Okay, I'm telling you, there's something about this. This candle body is too big, but look at day 2. Big, bearish, body, above. There's something about that. That's a different system. We might end up calling that strategy 3. This is it again. Do you see this again? That day 1 candle is stupid. Look at this day 2 candle. Big, bearish, body, above. There's something really great about that. I bet you could find those in reverse on bull trades too. Oh, we're going to get through this, aren't we? I'm going to be able to finish this. If you're still watching, you are a champion. Too big of a candle body, not taking it. Too big of a candle body, not taking it. Day 2 is too big anyway. This is pretty nice. That you could even justify an early entry probably on that candle. Maybe 1 of 9 contracts. But then day 2 is bullish. Forget it. Forget it. Day 2 blows. It's a bullish candle. Forget it. This is too big. This is okay. This is a big candle body, so I probably wouldn't take it. But you could probably go ahead and say, all right, fine. I'll wait and see what day 2 looks like. So that's day 1. Let's say it's a yes. Let's say you're not an early. That's not an early entry. The candle wick has to be much bigger than that. But let's say you even did it. I don't care. Let's say you even did it. Took an early entry. This day 2 candle isn't bearish enough. It's not engulfing enough. It's not below the day 1 body. Forget it. That trade gets closed. You close that out. I have wanted to trade Workhorse for a while. This day 1 candle's too big. The body's too big. This is a weird bearish candle above. It's not a big bearish candle above. It's a baby bearish candle above. It's not a trade, but there's something about it that I would trade. There's something weird about that one that I probably would trade. No trade. No trade. I mean, you could probably justify that, actually. An energy company. I do have a tendency to avoid energy companies. Day 1, small body, bigger wick. Day 2, bullish engulfing. Yeah, you could take it. You could actually take that trade. It would be a few days going sideways and you would close it. This is not a small enough candle body, large enough wicks. So we just skip it. It's an energy company too. I don't like the energy companies. You'll see me avoid those. They're it's like they almost operate according to a different set of rules or whatever. Day one, small candle body, kind of okay sized wicks. Day two is bullish and engulfing. You could fit day one inside of day two if you simply slid it over to the right, and it opens up a little bit higher. I don't know if you could find any options on any of this. This is amazing. That candle body is so small it's bearish or bullish. That's a great day one candle. It's fine. But then day two candle is bearish. So forget it. No trade entry. This is a nice gap. It's kind of too big of a candle body. It doesn't matter. The next day, it's not the right color. This is a day one. The candle body's small. You could say it's bullish or bearish. That's fine. And day two here is really, really great bullish candle. You could maybe justify that as a bullish trade. That's it. I hope this was helpful.